Ladies and gentlemen, welcome back. The second panel today will focus on the banking and finance sector. The panel includes Mr. Nguyễn Thanh, Mr. Quan Thanh, and Mr. Thanh Nam. This panel will be moderated by Mr. Chua. Dr. Chua, please.
Thank you for... This is on? Sorry, yeah. Thank you for joining us for the second session. I guess we're running slightly behind time. My name is Bin. I'm the economist with Maybank. I think we have three distinguished panelists to share with us about the banking sector. First is Mr. Tan, who has 20 years experience in teaching, designing, and implementing economic development policies. He's currently a senior lecturer in public policy at the Fulbright School of Public Policy and Management in Vietnam. He's also a senior fellow at the Ash Center for Democratic Governance and Innovation at the Harvard Kennedy School. And before joining Fulbright and Harvard, Mr. Tan worked in the public sector as an official in the municipal government of Ho Chi Minh from 1995 to 2002. Second, we have our own Mr. Tan, institutional analyst who covers the banking sector, has been with Maybank for 2 years, and prior to this, he has worked at the IFC, the World Bank, as well as CIMB Securities. He's been covering the banks for almost 10 years. He holds a master's in public policy from the Lee Kuan Yew School and US. And then lastly, very, very privileged as well to have Mr. Nam, who's a co-founder and CEO of Mocha, a pioneering mobile payment startup in Vietnam. Mocha has launched a strategic partnership with Grab. I understand that Grab has also taken a stake in Mocha. And is a licensed payment service provider that's partnered with 2,000 banks covering most of the Vietnamese market. Its patented products pioneer an increasingly popular QR code mobile payment and is accepted at large merchants such as McDonald's, 7-Eleven, as well as micro retailers. With that, maybe I'll just set the stage with just 4 quick slides on the Vietnam banking sector. So I think just 4 quick points to set the stage. One is, I think when you look at this chart, the banking penetration rate remains remarkably low, right? Compared to the rest of Asia, ASEAN, it's only 31%. So I think the opportunities here are huge. I think second point is, as an economist, I'm pretty impressed that the growth has been achieved without very much credit growth. I think when you look at the old model, there's a disconnection that you need to ramp up credit to drive up growth, and yet we've been seeing pretty spectacular growth rates. I think the second quarter is 7.3%, and yet loan growth has been coming off, right? It looks a lot more sustainable. So I think so the credit intensity has actually been declining. Perhaps some of the growth has been coming in from FDI, from equity, and therefore you don't need to rely on debt as much. I think the third point is there a risk of another big currency crisis, a devaluation, as we've seen in the past? Those lines in the middle in 2008, 2009, 2010, 2011 were associated with some big devaluation crisis, which of course will rock banks, will hurt financial markets. Is there a risk of that happening again since the growth is pretty strong? I think what is remarkable is that Vietnam is actually achieving pretty high growth rates, above 7%, and the current account remains in surplus, right? Because typically in the past, when there are huge current account deficits, I think that's typically the periods where there's a risk of a big currency crisis. So how is that achievable? Well, perhaps it's partly explained by the services exports. The tourism part is booming, is doing very well, and that compensates and keeps the current account in surplus, keeps the foreign reserves climbing, and hopefully this will mean that the risk of a big devaluation episode in the past will not show up, at least in the near or medium term. And lastly, just a chart on the NPLs. I think like China, there's a legacy of huge SOE banks. There's a huge legacy of bad debt that's inherited from the past. So no surprise that when you look at it, historically the NPL numbers have been pretty high, but as time, as the markets and growth has been happening, that NPL has been declining. So the dotted ones are some of the private estimates of the NPLs. It was as high as 17%. Now it's probably closer to 5.9. and also the official numbers have been declining for 1.9%. Again, I think rising asset prices kind of lift all boats. And if the market does well, asset prices does well, some of the bad debt kind of problem just goes away. So just to set the stage, I think with that, we'll invite Mr. Tan to start the ball rolling on the banking sector reforms and what to expect. Thank you.
So, good morning. So I want to start talking about the banking sector and banking reforms with kind of the picture that actually trying to link our first session when we talk about trade, foreign direct investment, legal reforms, and capital market development. And you can see that actually the takeoff of the Vietnamese economy and also the sustainable high growth always comes after a series of bold reforms in terms of liberalization of the domestic economy as well as aggressive, that's what in Vietnam we call active integration with the world economy. And it's the same picture with the banking sector, right? But of course, when you talk about banking sector, usually you have the problem of after liberalization, that sometimes you go too far without a prudential regulation system in place, and that leads to a boom and bust cycle, and then leading to restructuring. So actually, if you look at this picture, Vietnam in its 30 years of economic reform has gone through basically 3 cycles of that, and actually we are entering toward the tail end of one of the longest restructuring period of the Vietnamese economy that started in 2011. And I have to say, I mean, like the current 7% growth that we've been talking about and the attractiveness of Vietnam as a destination for investment comes a lot from positive results of the economic restructuring process and the stable macroeconomic environment that we are seeing in the last couple of years. But the issue is for Vietnam, right? If you look at the history of reform, is Vietnam is very, very good when facing extreme pressures to come up with bold reforms, right? But then, with the situation stabilized, with a good growth, then we just do enough to get that. And usually, how do you get new reforms, right? When growth is good, right? Everybody is happy, right? Rising middle class, growing trade. So even with the rising trade war, right? So this is also the same thing with the banking sector. Restructuring, we have lower non-performing loans, we have stronger banks. So why do you have to make bolder reforms? Right? So that's the key question we are seeing, and probably we are look at the current environment and look at the topic of our conference today is the global uncertainty. So, and that's probably that Vietnam still had, as a lower middle income country, is still facing a huge risk of a middle income trap and facing uncertainties in the global economy. Probably that will provide some kind of pressure for further reform, especially in other areas, but I will focus mostly in the banking sector today. But let's start at the beginning, right, of the development of the banking sector, that actually, in my view, that Vietnam went through a period of rapid financial liberalization in early 2000, with mainly 2 big reforms. One is the removal of interest rate control, and secondly is the provision of new bank licenses from the regulator, the State Bank of Vietnam, that set a stage for a rapid expansion of the financial sector, and the result of which was the speed up in the development of the local private sector that in the 1990s faced huge concern in accessing the formal financial system. Right. So you can see in this picture, right? So even though like our moderator just said, the level of banking penetration in Vietnam is low, but actually the level of domestic credit to GDP is among the highest in Asia Pacific region. So you can look at this picture, it's actually very similar to the trade picture that Tự Anh talked about in the first panel. So within a number of few years, so Vietnam now is actually among economies that actually with a high level of domestic credit as a percentage of GDP. You see the expansion of the banking sector within just a 5-year period following financial liberalization. Banking assets actually increased by 6 times. But also, more importantly, you can see is actually, you often think of Vietnam economy coming out of central planning with the state-owned banks dominating the banking sector. But with financial liberalization, it's actually no longer true. That actually private sector banks now account for half of the banking system. But of course, because, as I said, financial liberalization without the prudential regulation system often lead to extreme risk taking, and one of which is the exposure to real estate market. And also throughout that period, what emerged in Vietnam's banking system, especially with private bank, is a system of very complicated cross-ownership. So not only that there's a lot of weaknesses in the prudential regulatory framework, but because of cross-ownership, that actually all the positive features of the regulatory system are actually negated by the system of ownership. So you can go around capital requirement, restrictions on connected lending, even liquidity and non-performing loan classifications are all basically more or less circumvented by this system of cross ownerships. And because of that, right, so after basically 10 years of liberalization, the system was exposed to serious problems. Of course, it started with macro instability in 2008 and 2009. That was also become more difficult with the impact of the global financial crisis. We had a severe credit crunch in 2011, rising non-performing loans. Like you can see that actually one estimate, actually this is the official estimate of the State Bank of Vietnam, which was not revealed at that time, but actually 5 years after that was actually by the 2012, 70% of the banking system loan outstanding was actually non-performing. As I mentioned before, it's usually, so when the time has come to matter facing this pressure, actually there were bold reforms carried out by the government. So one of which was actually the identification of weak financial institutions, and the government was very forceful in actually forced a lot of M&As throughout the period from 2011 to 2015. But of course, right, but in this period of time, I think the priority was on maintaining stability. So there was a lot of regulatory forbearance during this time. A lot of decisions were approved by the central government so that the State Bank of Vietnam actually can allow commercial banks to do debt rollovers and also eventually set up the Vietnam Asset Management Company to move non-performing loans out of the balance sheet and into the VMC. But finally, with the weakest banks in the system, in 2015, the government was forced actually basically to nationalize 3 banks that we call in Vietnam zero dong banks, meaning the government take acquisition of this bank and transform them into 100% state-owned. And so the plan was supposed to be finished by 2015 on the eve of the party congress in 2015. 16. But because of regulatory forbearance, actually you just delay the problems further. So actually starting with the new political term in 2016, the government also have to start a new phase of restructuring and banking reform. But this time actually it becomes more serious in tackling both non-performing loans and trying to recapitalize some of the weak banks in the system. So you have the relaxation. So after the period of macro instability, during which the government has to resort to financial repression, actually the banks were relaxed in terms of interest rate controls. Fredberg in the first session talked about a lot of reform with respect to the bankruptcy law, but of course one of the biggest constraints in resolving non-performing loans is it's difficult for banks actually to do debt resolution and collateral foreclosure through the bankruptcy law. So the National Assembly actually approved a new resolution for commercial, to make actually bankruptcy procedures more creditor friendly. Basically, banks now can foreclose collaterals and move quickly through debt resolution and also trade non-performing loans on secondary debt market without having to go through bankruptcy, the bankruptcy law. The new structuring plan put forward in 2017 and put focus more on the real capitalization, making sure actually the state banks circular 41 asked all commercial banks in Vietnam to meet Basel II capital adequacy by the end of this year. So basically they will be, so the capital adequacy ratios will be fully compatible with Basel II by the beginning of 2020. And finally, the law on credit institutions were amended in 2017, giving a clearer process to put weak banks under special supervision and a bit clearer structure instead of government actually, like in 2015, nationalized the 3 weak banks without actually proper legal backing. So the amended credit institutions gave a clearer legal framework for the State Bank of Vietnam to continue restructuring some of the weakest banks in the system. So as you can see that the result is that, of course, because of some serious restructuring in the last 5 years, the economy is putting on a stronger macroeconomic footing. And what is important actually was a decision last year in 2018, after a few years of having good growth without the need to increase credit. So there was a realization politically at the top level in Vietnam that actually you don't need a very high credit growth to support GDP growth. And as you can see that actually, so the credit intensity declined continuously in the last 4 years, while actually GDP growth improved. And the moderator slide also show that, I mean, official on-balance sheet NPLs, and even if you account for the off-balance sheet items, have been declined significantly, actually helped. So in between 2011 and 2016, the decline in official loans was basically because of VMC. So you just one single decision, you move NPLs from on-balance sheet to off-balance sheet. You reduce NPL, but actually the NPLs were still there. But the positive developments between 2016 and 2019, with the help, as I said, of the new resolution on bad debt and the amended law on credit institution, is actually off-balance sheet non-performing loans have been reduced as well. But what remains is that it's no longer the issue of non-performing loan resolution. It's actually recapitalization of the banking of the banking system, because some of the largest stock banks still remain undercapitalized. The nationalized banks have not been restructured, and so far out of 40 commercial banks, only 13 banks, up until at that moment, only 13 out of 40 commercial banks have met Basel II capital requirement. So what should we expect? I mean, in probably in the next 3 years about the restructuring efforts is, so like any system, right? People respond to incentives, but particularly we, the Vietnamese. So in the past, the government imposed, because of instability, they imposed credit growth quota, interest rate control, at the same time using what we call moral suasion to ask banks to do recapitalize without any real effort. But what happened recently is that there's the linkages between removal of credit growth with recapitalization. So the message from the banking regulator is that if you meet Basel II standards, you will be eased on your credit growth quota. So basically you can grow your book if you meet the capital requirement. And that is that message gives the incentive for a lot of commercial banks actually now to do recapitalization. Of course, the challenge is still restructuring of some of the wicked banks, and the remaining, as I said, 13 banks met Basel II, but for the others, especially the state-owned banks, the largest bank is still the Agricultural Bank of Vietnam, 100% state-owned. If you want to meet capital requirement, probably the state bank will have to ask the Ministry of Finance to provide money from the state budget for the state-owned banks' capital increase, coupled with further equitization of some of these banks. For the private stock banks, participation of the new and even foreign investors, of course, it's still very disappointing that there will be no change in the FOL, foreign ownership limit, especially for commercial banks. So the 30% cap is still there. But for the recapitalization, probably there's a provision that all the private banks now are joint stock and public banks. But in order for have foreign participation, it can be converted from a joint stock bank into a 100% foreign-owned bank. So if it's a 100% foreign-owned bank legal framework, then you don't face the foreign ownership limit. And then, of course, is the continued strengthening of the prudential regulation. So after just the capital adequacy requirement, in Basel II, other provisions are being implemented by the state bank, especially in terms of corporate governance, internal control. So, but as I say in Vietnam, right? So the reform agenda is often very ambitious, like everything in Vietnam. Like potential is there, the realization is always small. You talk about FDIs early in the morning. I still remember back in the 1990s, we were very critical of the fact that realized FDI often account for only 25% of actually registered FDI. But in the end, you can say that FDI has been so far very successful. So looking at this banking reform agenda, maybe not all of this will be carried out. All of this will have question marks. But if at least like 25 or 30% of that will be carried out, at least for some of the weak banks are restructured, you have more foreign participation in the banking system, and international standard prudential regulation are in place, then of course Vietnam can actually break the boom and bust cycle with a stronger banking system. So that's I want to end it here. Maybe looking for further questions from the Q&A. Thank you so much for listening.
Thank you, Mr. Xuan. Yeah, for that comprehensive journey of the reforms. I think the market seems to like bank stocks. The bank sector has actually been one of the best performing sector this year. Next, we have Mr. Tan, our analyst from Maybank Kim Eng, and he will speak about the digital transformation in the banking sector.
Your Excellencies and ladies and gentlemen, So to continue the story about Vietnam reforms, Vietnam Bank's reform, I would like to discuss particularly with you today about the digital transformation in the sector, which I believe will be the next big reform that Vietnam banks will go through. So to begin with, I would like to borrow this chart from Mr. Brad King, the author of the Bank 4.0 book. And I think this chart excellently illustrates how banks have been evolved. And it perfectly illustrates the economics of banking with the distribution and delivery mechanism on one axis and the friction in the customer experience on the another. And we have moved from Bank 1.0, that is a physically banking center around branch, like long time ago. And then we moved to Bank 2.0 that give the concept of self-banking service. And it's with the emergence of ATM and the popularity of internet. And then we moved to Bank 3.0. That's when we have concept of buying when and whenever we want. That is with the emergence of smartphone and mobile payment. But the transformation from Bank 1.0 and 3.0 is still within the old format. That means still within the current banking model. We just need to upgrade the distribution platform. But we are moving towards the Bank 4.0. That's the concept, like banks would offer banking service and product to customer in a frictionless, real-time, and customized manner. And to do that, banks need to apply a lot of big data, artificial intelligence, Internet of Things, and all these kind of technology are available now, and it's very advanced already. And we have exponentially increase in the data that support this technology works. And we also start to have the regulatory reform that support of the digital banking. And that's the supporting factor. And for the pooling factor, we see the competition among banks that force banks to move ahead and think more innovatively, because the customer convenience, the customer experience would be the key for the long-term win, and the customer expectation bar it keep rising. So looking into Vietnam, I think I just repeat what the earlier speakers already mentioned. Vietnam, as a young marketplace, should be highly exposed to digital disruption, because we have a young population, we have high access to internet, and we have like 45% of population using smartphone now. And a recent research already indicate that, Vietnam, the digital economy is booming, and Vietnam, along with Singapore and Indonesia, leading the digital economic boom in the region. We have nearly 40% compounded growth over the past year, and looking towards another 24% growth. And interestingly, Vietnam is ranked as the most digital economy now in terms of the digital economy value over GDP. I don't know if they based on a revised GDP base or not, but that's something that to show that Vietnam is catching up with the trend. This also another survey by PwC, and it shows that Vietnam consumers are using more social media websites to make their purchase decisions, and this have one implications that banks need to review their distribution channel, and also another more important implication here is that consumers are leaving more footprint and data through the digital channels. So business player and banks need to be able to collect all of this data to analyze their demands better, and also analyze their credit profile better. So this is a fintech map I would like to show here. Is in Vietnam, actually the fintechs start to grow very fast, and especially in the payment and peer-to-peer lending areas. They haven't really taken away a lot of revenue and profit from banks by now, but more importantly, they are creating new customer experience to banking service, and this force the current banks need to stay alert and need to evolve. Banks in Vietnam still the dominate the supply chain of the service. So the fintech, as I say, they just have to raise the customer experience. But the competition among banks could be a big pressure for banks to evolve. I put a chart here to show you like how crowded the sector, the banking sector in Vietnam is, and how competitive it is. Look at how the low CASA ratio it is. CASA stands for current account and saving account, saving deposit over total. So this low deposit show a very competitive market, and also how underdeveloped the transaction banking and payment platforms Bank of Vietnam are having now. So, but after the restructuring and balance sheets cleaning up and restructuring period, from like recent 2 years, we start to see that banks many young and dynamic banks start to refresh their model, refresh their strategy, and digital banking become a big story in that agenda. And based on different surveys and our own observation, I see that about 20 banks of Vietnam now have started implementing their digital strategy. And 40 banks are still in the phase of developing a digital strategy. And among the most advanced guys, banks they're focusing on now is automation of processing, and then to give better customer experience in terms of shorter delivery time. But there are a few banks, I can name 2 banks, already move ahead by introduce new customer experience from the onboarding stage. And also they try to create an ecosystem of service, and also they try to embed the banking service underlie that other product and service too. So I think here's again the fintech map, that like the ideas of YOLO by VP Bank or Life Bank of TP Bank in Vietnam. These are 2 young banks. Like T Bank, they just start to grow in these recent 3 years, and with the Life Bank ideas, they can increase their customer base from less than 500,000 to 2 million in just 3 years. So this success of the young banks start to make other banks to rethink their strategy. And moving forward, based on my discussion with the industry players and also my own observation and analysis, I think that in the next 5 to 7 years, the banking sector will start to see the digital transformation accelerate, because we see now bigger banks start to join the ranks. Like this year, the largest market cap bank like Vietcombank, they start to have an advisor to build the digital strategy. And we also see the government policies support the digital economy and digital banking. Like my colleague just mentioned about a Politburo resolution aimed to grow the digital economy of Vietnam to 20% in the next 5 years, from currently 4% only. And we also expect that a sandbox mechanism would be introduced by the central bank that help banks to test new digital initiatives. But in the longer run, we start to discuss about a national database, national data infrastructure. And I hope if this is implemented, that would create a breakthrough in the digital banking, because it have to address one bottleneck in the fully digital banking journey, is the know your customer procedures. Because currently, banks still need to do the physical, or maybe one bank get the tele KYC. But if with the national database, we can see that bank can apply for e-KYC. And in terms of business opportunity, I think Vietnam Bank will start to have higher demand for advisory for digital transformation, and of course the demand for IT talents, for AI engineering, data scientists is increasing. The report by some headhunters see that the demand for IT already grow, but IT talent already grow by 50% each year in recent 3 years, and the salary also keep growing. And thinking beyond the financial, and I think to prepare the labor force for digital economy in the long run, the demand and investment in STEM education start to increase as well. STEM here stands for science, technology, engineering, and maths. This STEM education, they try to combine these three disciplines that used to be taught separately before in one package, and it aims to stimulate the innovative thinking, and they try to equip the student with the knowledge in all these for discipline, but also have a real application to solve the real life problems. So yeah, I would like to end my presentation here, and thank you very much for listening.
Thank you, Mr. Tan. So I think on one of the pictures there was all the icons of all the various players, and there were the huge numbers. And I saw in the payment space there are probably about 40 over names. And I think that's a good lead up to Mr. Nam, who will talk about Mokar and what's happening in that space.
Good afternoon. Actually, it's already afternoon. And I already knew before the session that I will be the last presenter before lunch. So I only have 3 slides and no numbers, promise. And actually, even better, my previous panelists helped present this slide already. This is my one slide. So what I want to share with you here is the same slide, and it actually comes from a Singaporean media outlet. And because you've seen it before, let me just be very brief. And the single message I want to share with you through this is that it's already a pretty busy slide, even for a very young market like a fintech market in Vietnam. No numbers, so I won't quote the often share statistics from the State Bank of Vietnam of how many times it has grown over the last 2 years. It's grown quite a lot. There are already many segments in the fintech market in Vietnam. You probably see most of the common fintech segments that you would see in other more mature markets, from payment to alternative lending and or P2P lending, which is a lot more sexy term, but also very sensitive. Digital banking, as you've heard before, and even insurtech and wealth management, and of course cryptocurrency and blockchain technology and so on. So everything that you can think of in terms of fintech development in a market is already there in Vietnam. So the market is fairly exciting. It's fairly promising, but at the same time, as you've heard today throughout the various sections, there are many challenges, even for the traditional areas of the economy, let alone the new area like fintech. So that's the first message I want to share. So it's very highly challenging in a lot of aspects that I can go into a bit more details. Regulatory-wise, obviously, similar vein to what you've seen before, but specifically, in Vietnam, as you've seen, the proper financial penetration, banking account penetration is still very low. And here, let me break my promise just briefly. A number, we've seen 30 or 31% banking penetration in terms of bank accounts. Only 2 days ago, I heard directly from a State Bank of Vietnam official that in Vietnam there are roughly 43 million bank accounts. And that actually is over 60% of the adult populations of Vietnam having bank accounts. So statistics could be inaccurate, but I think it might be a bit more promising. But whether it's 30+% or even close to 60%, the non-bank population is still a significant segment in the market. And in terms of regulation for fintech, the normal aim or wish is that fintech would help push financial inclusion at much faster rate than the traditional banking model. But the regulatory framework in Vietnam today is not conducive to covering the non-bank population. For example, for us and other players in the payment market, if we want to provide an alternative payment instrument, being, say, an e-wallet, like a store value facility in Singapore, that's the term, we can only do that with the bank populations. So that seems counterintuitive, right? It's a non-bank payment instrument, but then you have to have a bank account to use it. So that's a fairly fundamental challenge in the regulatory framework today. eKYC, you've heard mentioned before, Asian banking, those two are also very directly impactful for the fintech development, and they're not there yet. You cannot do eKYC, you cannot do Asian banking today, as of today. Hopefully that will change quickly. I will share a bit more on that. But at least as of today, it's not there. And you've also heard of the mention of the sandbox. There had been talk of the sandbox for trying out new ideas in the fintech space over the last 2-3 years. There is even a fintech steering committee from the State Bank of Vietnam being chaired by a deputy governor, and the sandbox is one of their main objectives. It's been mostly talk so far. Obviously, it's fairly positive talk, but realistically, nothing is there yet. So in terms of regulatory framework, it's still very challenging for fintech to grow in Vietnam. But that, I think, is not even the largest obstacles, not even the largest challenge. In our actual work in the market, the largest actually market-specific, market-related. Consumer behaviors in Vietnam is a huge challenge. Cash habits, you probably all heard of numbers, which I won't mention. Very high numbers in terms of how many cash transactions are there in the market. A severe lack of trust in e-commerce. The normal logic is that if you want to grow e-payment, which is probably the first segment you need to grow in order to grow fintech, you immediately think of e-commerce. And the story of Alibaba and Alipay is well known. In Vietnam, e-commerce has grown fairly well in the last 3 to 5 years. But e-payment has not gone in parallel with e-commerce. And if you do come to Vietnam, if you go into the CBD, you go to the offices, the normal working office, you will see a lot of delivery guys, delivery people on the ground just in front of the office, and a lot of office workers coming down to pick up items during the day. They probably spend more time picking up things than working, only slightly less than on Facebook, but no payment, all cash on deliveries, because of the severe lack of trust in the e-commerce providers, because of fake goods, because of poor quality in servicing the deliveries and the goods and so on. So it's an entrenched problem with habits, cash and lack of trust. The market dynamics doesn't help. The market, at least we've seen so far from the banking perspective, it's highly fragmented. 40 banks for a market like Vietnam, and many of them are very small banks with very little market share. So it's really fragmented. But it gets even worse when you come into the retail space. For example, in other markets, you would expect the like of McDonald's, 7-Eleven to have thousands, if not tens of thousands of locations. In Vietnam, McDonald's has 20 plus outlets. 7-Eleven, I think, is about twice the size, like maybe 30, 40 locations. So you have few millions retail outlets for consumers to transact as for their normal life. Few millions, and probably also a few million brands. All of these few millions are no name. They're very fragmented. So if you want to get them into a digital economy, why e-commerce is not that well developed, at least it's for e-payment. The offline, the traditional retail is so fragmented that in order to get a significant percentage of them into the e-payment ecosystem, the effort that you need to expand is huge. It's almost impossible to get a significant percentage of coverage. So fragmentation and cash entrenchment is market dynamics that are there. Realistically, that doesn't help. Expertise, we heard before, the potential is great, but then in order to realize the potential, you really actually have to execute. Ideas are always there and easy, but execute, you really need people. And I think opposite to the popular belief, or I've heard a lot of people mentioning that Vietnam has strength in the labor market, in good IT workforce and so on. Actually, my actual experience, my first-hand experience, is that one of the most severe challenge we face is the lack of human resources. And especially for fintech, it needs the combination of fin, like my t-shirt, and tech, my jeans. You need an odd combination. You need people with deep expertise in technology, but also good ideas of applying technology to real problems. And financial space is not an easy area to get into. And regulatory challenges make the challenge of human resource even more severe. People who are used to working with the State Bank of Vietnam, for example, probably would not be the most tech savvy. Right? So it's extremely challenging to get good people to work in fintech in Vietnam, contrary to what you might hear elsewhere. That's my first-hand experience, and I think most of our fellows companies, our similar companies in Vietnam face the same challenge. Funding. Vietnamese, there are quite rich investors and local investors and successful business people. They don't invest in fintech or even tech. They invest in quick turnaround businesses. They invest in restaurant chains and retail businesses where they can see whether they make or break in 6 months. Whereas in fintech, for example, especially in payment, which is the most exciting, most lively space we've seen so far, it's taken me 13 years to get to where we have a relatively successful startup. It takes a lot more time and growth curve to get to stability, maturity in fintech, and local investor don't have that appetite. Foreign investors, few years ago, there was a lot of concern with system risk, whether the regulatory framework will change in a positive way or not, whether political economic stability. That kind of improved over the last few years, but then over the last 6 months, the like of Uber going IPO not very well, Lyft, SoftBank with WeWorks, and now the concern come to our region with Grab and similar big, like heavily invested tech or fintech, makes the appetite actually starting to worsen again. So funding will continue to be a big problem, and when combined with the challenge in market dynamics where you need to change millions of consumer behavior, no one has found so far a better formula than spending money on convincing user to try something new. So actually the two challenges together makes it a lot more challenging now. A bit of competitive pressure from two angles. The incumbent banks definitely don't, in the long run, want fintechs to be more successful than they are, and they're holding all the trump cards today. So actually there's start to be tension between incumbent big players and the new fintechs. And for Vietnam in particular, there's always some concern with foreign players coming in, and especially in the space of financial services or in fintech in particular, whether foreign players can dominate the market is a real concern that the regulators and other stakeholders in the country always be very mindful of, and that sometimes become a challenge. For example, Alipay signed an agreement with the national-owned Switch of Vietnam when Jack Ma came over a few years ago. Big fanfare is not implemented yet because of the concern with foreign cross-border transaction that Alipay might dominate the Vietnam market in payment. But not without interesting prospect. So I'll be very brief with this, and then hopefully we can share more in the questioning. Payment, I think, will happen still, despite all the challenges. Payment will happen at large scale. We already have millions of consumers active on our own payment platform today, monthly. So that means it's fairly promising compared to 2 years ago. Nobody thought that we would have 1 million users transacting every month on a single platform. Alternative lending, even though I think the biggest challenge is regulatory there, I don't think P2P lending will happen quickly in Vietnam at all, especially given what has happened to China over the last 2 years. But alternative lending, there are other forms. I think they will find a way, for example, with innovative credit scoring, but then still proper lender would then be lending to SME or consumers. Those alternative lending, I think, will happen in Vietnam in a positive way. Advanced technology, hopefully that will also come into play. I don't think cryptocurrency will have any future in the near terms at all, but blockchain, which is the technology underlying cryptocurrency, will have a role to contribute. Insurtech has a lot of potential because, at least just because of the low penetration of insurance in Vietnam. And I think it's a relatively easy area to tackle, to bring innovative services to the market. And similarly, wealth management. And finally, even with the challenges of regulatory framework I mentioned before, in my actual experience working with the regulators in Vietnam in this space, I have a lot of confidence that things will change in a positive way. For example, the new decree targeted for end of this year to replace the decree on non-cash payment. Decree 101 is going to be replaced. I think they will find a way to put Asian banking support in there, and they will find a way to support mobile money in there. So hopefully we can work around the challenges and realize these prospects. Thank you.